G'day everyone, welcome back to Pete's Investing. Today is June the 2nd, 2023. This is the spot gold price update. Gold is on the weekly is broken down into a neutral positioning. You can see there it's fallen off, and likewise on the daily it's broken into a neutral. So let's look at it more closely. There is a diagonal ascending line along this bottom here, but it's way off from where we are in terms of the price action. There is almost like a triple top up there as well, but apart from that there's not much more to say on the weekly without going first into the daily. Now we did have a you can see there on a daily it's likewise in a neutral positioning. It was bearish, and this looks like it's going to break up into more of a bullish signal. We did have a divergence playing out here on the CCI, a bearish divergence versus a bullish divergence on the price chart, and that actually broke below this trend line which we drew in amongst that divergence, and our initial target was going to be the 38 to the 61% level. You can see there the price broke below that trend line and hit our target area down here on to the 50% level. Now the other thing I want to mention as well, we did draw this minor support area, this dotted line. I'm going to delete that and move this major support to that point there. So that's our major support, and we're looking at further increase in price from here. Now where it may go, let's look at the hourly chart. So let's look at the hourly chart first. Let's maximize that. So you can see there between that support level, and let's move that down to make it a bit more accurate to that bottom there. So we're looking at possibly hitting this diagonal ascending line. Why am I saying that? It's because if you draw a Fibonacci from that level to that recent high, then that corresponds with the 61%. And that 61% is a key area of a potential bounce to the downside and reversal back down, or if it breaks above that we're going to see further advancements and further moves to the upside. So what we're going to do is we're going to place a target range between the 61%, the 50% and 61%. That's our initial target range, and it may well hit that area, possibly even higher if it gets to this diagonal. So that's our initial target area from where we are today. There's no other resistance areas at the moment showing up, so that's going to be our initial target area. Also, if I show you back on this, if I zoom out, running this back test on the going long on the gold chart on the hourly, and you can see there during that period we did have a few averaging downs. We don't use stop losses, and you can see here this is the biggest drawdown on a profitability. This is a profitability chart, and as I always say, to avoid that drawdown, always trade in the direction of the weekly and the daily. So you can see there during that price movement back here in April 22. So if I go back to April 22, that was during that decline, same as that period there. And April 22, that was during that period there. So you can see there's no long positioning available on the weekly. Likewise, there was no long positioning on the daily as well. So you would have avoided trading that drawdown. Alternatively, using the opposite logic, you would have gone short during that period, and that would have been profitable for you going short. So to understand this and other trading strategies, reference the links in the description below. Subscribe to us on Patreon, where we also take requests and answer your questions. We also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.